Thank
Started.
you. All right. Hi, everyone. I am Toni Hansen. Most of you guys probably know me from the Traders Expos, Money Show, done CNBC a few times, wrote for Kramer's Street.com for a number of years for the Real Money Pro. And I've been trading since the mid-1990s. So I've seen pretty much everything come and go when it comes to online trading. Back in the day, there wasn't a lot for education, as Anka and Kim and those guys, ladies, can tell you. There wasn't a lot for online education, especially when it came to technical analysis. A lot of people were just transitioning off the floors, or they were focusing on fundamental analysis, and it was really tricky getting started. Commissions were like $40 a side and an out. And it was difficult getting going. So I started out as a swing trader. And from the very beginning, I had like the early sort of blog, or I guess you would call it, like, your social media feed. And I basically posted everything I was looking at and why. And I quickly saw that a lot of basic kind of strategies that I'd come across, like bull flags or things like that, if I just took them every single time, I was getting hit hard. And I know Kim was talking about, things like breakouts and, stop placements and things like that. And what I'm going to build on today in today's session is how to not only place those stop levels so that you're keeping those really, really tight stops, but also how to adjust them and move them as your trade unfolds. So if conditions change, you're still able to hold on to most of your gains. And this has taken me a long time to develop this system. So what I'm going to share with you is the basics of how I do trade management with regards to stop adjustment and moving things as a trade is unfolding, but still allowing room for it to go further. And then at the same time showing you, hey, what happens when things aren't quite doing what I anticipate, and how does that change? So I've traded a lot of markets over the years. I started out in stocks, added futures, added Forex. Today, pretty much all I traded was oil. I trade gold, bonds, you name it. And so what you're going to find is that the stuff that I teach you is really applicable to every market and every time frame. So it doesn't matter if you are an investor, if you are a day trader or a scalper or Forex trader. Everything that I share with you guys is going to be applicable to your market and your favorite time frame. So that's really important to understand. There's little nuances, differences when it comes to, different time frames that are the best, for example, for trading Forex and such. But overall, the core of technical analysis is going to remain the same. So in today's lesson, I'm going to basically give you a crash course on the program that I've developed that has helped me overcome my two biggest trading hurdles. First one, bailing on winning trades too dang early. Happened to anyone here? Or should I say, has it never happened to anyone here? Now let's see how many people jump up and say, no, that's never happened. So far, nobody said that. The second one is getting flushed out of these, they end up being great positions, but I'd get flushed out before they would take off. So I was getting into them basically too early, or they'd go after your stops. And Kim mentioned the 100 pip stop that she had, and they will go after that. And that is what you're seeing right now in today's market, where things have gone pretty kind of crazy over the last couple of weeks. But you know what? It wasn't unexpected crazy, because the market has been primed for anything to trigger the type of action that we've had over the last 2 weeks. It was just waiting for a catalyst. So coronavirus, primaries, those are the two catalysts that are kicking this off here, but we were already primed for this. I do a forward outlook on the market every Fridays, and we've been watching for this. In fact, the Friday before we really saw this crash happen, I'm like, hey, we've got a much bigger drop coming. When I go through today's presentation, you're going to see the steps that I take with moves like this and how to feel out whether there's going to be more movement or if something's done and you need to tighten up how you manage these positions. So let's head on over here. The first thing with any strategy that you're looking at is you need to be having a correct entry and stop placement. I'm going to start with just, a very basic core type of strategy here. And this might look kind of messy to you at first, but what we're looking at here is an inverse head and shoulders, and can kind of see a little bit of a cup with handle in here too. Let me show you the details. So what we've got here is a low, a slightly lower low, and then a slightly higher low. One of the things that is really important with a head and shoulders or an inverse head and shoulders is time development. What time development means is that I'm looking at the distance between the left shoulder, the head, and the right shoulder, and I want those levels to be about the same. So this is what gave me the trigger for this buy strategy here. We're looking at the NQ. And this is not from this week. This is an older setup here from the last time I gave this class. So what I'm going to do is I'm going to walk you through this and show you the system of trade management on this. And then I'm going to show you one of my trades from oil today with the exact same system. So this was the day that I gave, night before I gave a class on the same topic. And what we were looking for was basically the first main impulse move or trend move where it would hold the channel. So not looking for a bigger correction on this strategy. You can, basically all you do is take everything that I'm going to tell you guys today and you just apply it to the next time frame up. So head and shoulders, typical head and shoulders, you need your stop under the low of that shoulder. Now, there's a couple of tricks to this. See how we have one low and then a slightly lower low with the shoulder? Unfortunately, I don't have the annotation tool here to show you guys, but hopefully you can all see my mouse okay. So what you can do is you can take and draw a line from this first low to the second low and extend it and give it a little bit of room and place your stop under that level. And that's going to help keep you from getting flushed out on this. Also notice there's a little bit of a momentum shift here that goes into that right shoulder. So it drops really quickly to start with, and we're still not at that time development yet. It pops up right here, and then it has another pullback that's a little bit more gradual right into the entry trigger. My actual entry was a little bit earlier than this. I have other systems that I use to get into things even faster. But on this time frame, a really conservative entry is just to use the channel break entry. And so what I'm showing you guys here today is the conservative stuff that I teach my newer to intermediate traders, and then go into more advanced stuff from there. So I kind of started teaching traders almost from the time I started trading, not necessarily intentionally, but I started sharing what I was doing. And from there, it got to be where, the Money Show would ask me, come speak for them and come do all of these other things. And it- I just loved it. I loved seeing you guys making progress in your trading too. And I discovered that it made me a much better trader because I couldn't just take something on a whim anymore. I had to be able to explain why I was doing it. And if it didn't work, I'm not okay saying, oh, hey, this is a pattern that just doesn't work 20% of the time or 30% of the time. Just go on and keep trading it and you're going to be right 80% of the time. I want to know why something doesn't work 20% of the time. So it really brought out like my inner analyst, and that's what I love about teaching you guys and also about trading, because it is something where it's very systematic. And the strategy that I'm sharing with you for managing your trades and moving your stops is one that you can apply everywhere. So let's take this inverse head and shoulders here, and you can see we've got a continuation move. Now notice the adjustment of the stop here. So it went from being under the low of that right shoulder to being under the low of this congestion. But here's the thing. I do not move my original stop until it breaks out of that congestion. So this is really key here. If you move it sooner, notice this low over here, like closer to that first green circle, and then it goes to a slightly lower low. So if you move your stop to right there under that first low as it starts to do that congestion, you would very easily get flushed out of that position. So one of the biggest mistakes that I was doing is one of the cardinal rules people were teaching is that, hey, once you've got a profit, especially if it's already covered your stops, move your stop to break even, because you don't want to take a loss on something that has already covered your stop. Well, it took me a little bit of time, but then I realized that's not really the best way to do things, because what happens is that if you're looking for something that goes past just that original impulse move and you're actually looking for a bigger trend to unfold, it has a habit of coming back into that break-even zone. Now, there's advanced ways you can manage a trade so that you can reduce your exposure. For example, you can take off part of your trade when you get those smaller impulse moves and then add back in on the congestions, but you don't always have the opportunity to add back in. So that's a little beyond the scope of today's session, but I wanted you to understand why I don't use break-even stops and why I don't advocate for them. So a lot of times when I get out of something that's break even, it's because there's another technical reason that it took me out of the trade there. It wasn't because I moved my stop to break even. So once this breaks to a new high, it's essentially triggering another setup. So this is the conservative stop, but since it's a breakout of that channel, you could even move your stop under that smaller low as well and still have really good potential that even on another little correction, it's not going to take you out. So we want to have very technical reasons for moving your stop. So these are the first two stops. Now, after that point, it's moved again. And I'm going to use that same strategy again, the third time. So we're going 1, 2, 3. This time you'll notice though, this correction's a little bit smaller. So what tends to happen in a security that's coming off of a low is you can have a slower start and then it will ramp up momentum. So I use a conservative stop to start with and to continue with, and then I get more aggressive as I start to go into a mode of looking for target levels to then happen. I'm always focusing on two-wave corrections. It's really important to watch for those. But then as things start to ramp up and momentum increases, what you're going to find is that correction times can start to decrease. So you'll start to see these slower zones of corrections before you get the next continuation. So after I've moved it for a third time, once again waiting for that correction to break higher, I'm going to start to get more aggressive on managing it, because now I'm going into target mode. I want to look at where I can take my gains on this trade before it goes into a longer correction and breaks that uptrend channel. So with one move up, two moves up, and then the momentum increasing, the odds are going to happen to increase that I could go into a longer correction mode. And I don't want to see that happen. So in this situation here, notice that this goes to a higher high, where it basically breaks the previous high. So that adds extra confirmation that I'm okay tightening up this stop. So I've got 1, 2, 3 movements on my stop here, still going with the trend. Now I'm focusing on the target levels. So at this point, I can get even more aggressive on the trade management, because now what I'm looking for are measured moves on smaller time frames. The smaller impulse waves, I'm going to be looking to target out and place my orders on the books going into those target levels. So as this has a smaller correction and then again breaks higher, I'm moving my stop up to under that low. But not just that, I'm also then pretty quickly starting to move it to under the channel break low too. So these are ways where, like, if you're constantly distracted in a trade, maybe you've got a phone call coming in or something like that, you can go and mechanically move these stops without having to pay as much attention to the smaller details. So it helps you hold on to those gains, not risk giving back with a much larger correction, and yet keeping that focus on where that larger correction is most likely to happen. So at this point, I'm at target mode. I'm looking for a measured move to get out of that trade. So here is the smaller measured move, and then you can also see the larger measured move. And notice that the momentum is really comparable on both of those, so that helps me with establishing that target level as well. Now, a lot of things could happen at this point. The trend could still keep going, but do so at an altered momentum or altered pace. And so here's where, if I'm going to hold on past this level, I need to be looking at what's happening on the larger time frame. In this instance, there wasn't something on the larger time frame to keep me in the trade, to be willing to hold through a bigger correction. If I had, what I would have done is viewed this entire move up here from the green circle to the blue circle the same way as I would have as a move from the green circle to that previous high there. And then said, okay, I'm going to keep that low until I have another low, and then I'll move it. So if this went into a longer correction and I'm in here and I'm looking for a much bigger trade, I'm not moving a stop this entire time until I've got that two-wave correction and a break to a new high. So once I have that break to a new high, then I can move the stop on the trade if it's something that's focused on a bigger time frame. Or you could use the other option where, hey, you take something off here and then you look for that correction to add and build back into it. So those are ways that you would do that. So you're basically taking the entire thing that I just showed you on this 1 minute chart, and then you would apply it to maybe a 3-minute or a 5-minute time frame instead. So here's the different adjustments. And let's say your order doesn't get executed. You don't get taken out. Your fill doesn't get hit. Usually what I do is I have my order on the books where it is a little bit under that measured move, so that as it's moving into that resistance level, I'm getting a fill. I'm going to show you my mistake today because I did not get that fill on oil today. So the alternative is that if you don't get that fill, you can use that channel break and still hold on to most of those gains before you risk that pullback or that correction. So here is like kind of your last ditch thing that shows you, you know what, this is turning around. And what this did was it triggered a reversal trade for me. So I flipped the trade here. You can see it breaking to the downside. You got your stop above the high there, and then you just repeat the entire thing on the way back down. Now, I don't have those for this presentation because I wanted to dive into today's class, into what was happening in today's market. So basically that NQ trade, when it flipped, it did that entire series all the way back down again. So let's change gears here and look at oil from today. So I've mostly been trading oil over the last week or so, and the reason for me is that we haven't had as much of the volatility in oil as we're seeing in the NASDAQ right now. So in the NASDAQ right now, I've seen 2 to 3 point spreads. I have seen a 2-second bar with practically 20-point move on it in the NQ. Highly, highly unusual. But you know what? It's like trading back in 2000 and 2008, and all of those highs, the market acted the exact same way. There's nothing new about it other than that the prices here are at much higher levels. Well, you know what? They seemed pretty darn high back then too. So not a lot different, but oil getting smoother moves. They're not taking out stops as easily and then going in the same direction. And we're not getting like as big of swings. So it's just an easier market right now. Another option for those of you that are futures traders, of course, E-mini traders, is that you can trade the micros right now. And it's interesting because the micro NQ is trading a whole lot like the NQ contracts. So it's been something, man. But yeah, that extra where you're taking a good 20-point stop on the NQ, not so bad if you're trading the MNQ. Well, oil, I've been able to get away with essentially all of my stops have been between 5 to 10 ticks and still getting really, really good moves on them. And that's what I'm going to share with you here on this trade. So this is a trade where going into it, I felt that I had a bit of extra risk. Now, the strategy itself was dealing with momentum change. So the market had a really strong upside move, but here's where the little bit of the added risk came from. Ideally, this would be one step up, a little correction, second step up. What you can see is the step up, and then it kind of chops and heads to the high. So what that means is that it can increase the risk that I get a trigger for break higher and then it turns around and reverses. So I'm keeping this in mind in the back of my head as I'm going forward with this. So what catches my eye is the shift in momentum. Strong drop down, slower drop down, slower two-wave correction. This is my buy trigger. So this pattern is one that I call a phoenix. And notice in that second part there, there's actually 2 smaller waves. So I built into the position at that level. We're dealing with a 50% Fibonacci retracement. So it's holding in that upper 50%, which is key because if it breaks through that 50% support level, it's harder to break the previous highs on an upside breakout. So another key level is that I've got 76.4% fan support here. I don't use a lot of indicators. Fibonacci is one of the only ones I use, and I use it because it also is a great visual tool, especially for helping traders get confidence in their trades. So when I'm looking at a continuation breakout, if I have something where the first low is coming into the 61.8% fan, the second low is coming into the 76.4% fan, and unfortunately I don't have those written on here for you guys, but the purple one is 61.8, the black one 76.4, and it's going from the low to the high. So what that does is that gives me setups coming off of that level. So if it's hitting there pretty quickly, I'll usually wait for the second test to get me into the trade. So all of these things are coming together, and that creates the setup. So here's the trigger. I used the breakout here, and then I added on as it kind of pulled back into that range and showed me, hey, momentum is really, really strong on this. Initial stop placement under that low, the same way it would under a right shoulder. Now, as this continued, I spoke about on the NQ how you can use a smaller impulse move to protect part of the trade and then look to build back into it in the early stages of a trade. If you have factors where the risk could be higher, what this does is it allows you to basically get a better base price, and a lot of times I will get to the point where when the trade takes off, even if it technically takes out a stop, I've still made money on the trade because of how I will have managed that at those early stages. So I'll go protect part of the trade with a smaller measured move and then look for correction to add back into it. Now, if there's not a lot of cons on a trade or any cons, it'll go and blow right through there. So it won't make sense to take off part of the trade. But because of this kind of extra little shift here, that's what I did in this scenario. So here's where break even becomes a problem. Notice you've got the pullback here, right into here. And time development on this is important. So when we're looking at that first pullback for the Phoenix, it doesn't keep going. It doesn't break these previous highs. So to go the next time around, we're basically taking this correction and doubling it. So this correction, add it over here again. It gives me the do or die point where if it's going to go, it's going to go at that level. So usually it's going to be the 76.4% fan. It doesn't like to hit it a third time. If it pulls through that fan third time, it's basically done. So the conservative thing to do is to keep this stop here until this again breaks that next channel to the upside. There's ways to do this where we can get tighter and still be pretty good, but it's never going to be a break-even level. So when I go and see how this reacts at that break-even level, what happens? You would have gotten taken out like right as it popped. It would have been horrible. So I never use the break even. Instead, I will use other triggers like watching that time development, realizing it, hey, if that went past that time development compared to here, I'm going to get more aggressive. But until then, the core way that I manage the trade is to wait for this to again break to a higher, move out of that channel, and move the stop up again, just like I showed you on the NQ. So that keeps things from getting to a point where you're taking yourself out right at the exact wrong time. So that was the aggressive, kind of more aggressive way to manage that stop. But you could also do it where you wait for the previous high to break and do it at that point. I don't usually do that. I'll prefer to use the channel break where essentially if it's triggering another buy strategy, then I'm going to use what I would have had as the stop for that buy strategy to then move and adjust my stop. So now we've got two ways of where we've moved the stop. One, two, and now we're coming up into a situation where it's getting to be a little bit stronger. So here it can get a little bit tricky. What often happens is that when momentum is building, after a two-wave move, it can go into a point where it will then have a shorter correction and continue. So you can see some examples over here, like a little two-wave here. You've got a little zone here. I call these kneecaps because I look at this as like a leg, and then that's like the knee of that leg. And so what I'm looking for is that as that breaks higher, if it's going to do a kneecap, it would hold the low of that once it breaks this high. So it might do like a little smaller pullback here again and then go up, but I want it to hold that low. I want it to hold that kneecap zone because now at this point, I'm starting to focus more on my target levels. So measured move target level would be about here, and it's also a Fibonacci zone that you can see I've got some dotted lines up here. So that's helping it out as a drawing point. But here's what happens. So it fell into a little bit of another pullback again. So basically it's trying to do what I would consider to be a kneecap on a bigger time frame, except it shifted momentum a little bit there. So just like that shift in momentum going into the trade to begin with, it gives me a little bit of a heads up, I need to watch this. So if this had gone and had like a more gradual move off of this 0.4 level, I wish I could draw on this, but let's say it pulled up here into like maybe 48.20 or something with like a slower move. If that channel had broken there, that would have gotten me out of the trade before another correction because it would have told me, hey, that could go for a two-wave correction before it has a chance to either try to go higher or go into a longer base. And I just want to wait for another entry. So at this point, when it breaks up again, getting more aggressive with the stop placement, and now focusing on two-wave movement again. So it goes, again, new target because new two-wave zone, but I still have that Fibonacci level there. And so that's kind of, keeping my attention there. So I had my order placed right at that Fibonacci level, and it was just a couple of ticks underneath that measured move for the new measured move. Guess what? It didn't hit. And I'm busy trying to do other stuff. So what I had to do instead is, here's my stop that I had kind of trailing up underneath this because I've adjusted it so it's getting tighter and tighter as I'm going into that stop level. So I'm hoping, hey, it hit it hard. It's probably going to try for a retest of it that could push it up into that zone. So I wasn't too concerned to begin with. But look at that. It pulled all the way back up into here. So usually what I want to do when that happens is I want to get out as it's bouncing, and did not. So I use a smaller channel break, get me out of the trade, but that pure channel break that I was talking about that you can use to kind of keep you safe, that's going to do it for you too. Here I'll show you my executions on this so you guys can see what I was doing and what I was following along. So here's how I was moving and progressing stops. You'll notice I didn't move it under here yet on my particular trade, but what I'm teaching you is the core of how to do this, and there's going to be some subtle little differences on every single trade, but if you stick to the core, it's going to help you out. So what I was looking for was that this would do that little pop to get my fill on there, and it just didn't. So as soon as that started to pull back, I bailed on the trade. So that goes into more advanced trade management, but it's basically just a smaller little channel break. So this is a little bit of a bigger channel break. That's a smaller channel break. And I've had times where this will go and then pop after that point too. But the overall market was starting to turn over. And typically with a measured move, you're going to be looking for 100% Fibonacci extension, right? Well, notice this is only going up to the 76.4% extension compared to the move over here. So if momentum had broken out of this break and held with the same pace as it did over here, ideally with a one move up, little correction, secondary move up, one move up, little correction, secondary move up, I'd have aimed for that 100%. I'd have looked for a higher target and expected to get that higher target. But with the way the momentum is shifting here, now that whole momentum channel is much more gradual on the upside. That tells me the odds of this turning around are increasing. So it's basically creating traps for the bulls at each of these higher highs. And you'll notice we've got some pretty good reactions at some of these Fibonacci levels. So usually, if this is going to give a good continuation move, it's going to have a nice solid move into the 61.8% Fibonacci extension, pull back, sometimes into 38.2, and then go and hit that 100%. It won't have this little slowdown type of thing going on that we had into my second partials the same way that we had going into that correction in the first place. So this whole shifting that is going on is making me more aggressive on the trade. And I ended up flipping this too. Didn't catch it right here, but I did flip it over here for continuation on the way back down. So this is what's happening here when we're adjusting the stops, and we're doing it at a point where we're keeping as much as we can, but still giving enough room to get more. So if I go and I pull up like here, I'm going to grab a chart of what's going on in the NASDAQ just right now. Grab this from my other computer here. I'll show you what we've got with the current momentum and just, current price action here. I'm going to show you 15-second chart and then 500 tick on the NQ. So let's grab this. And show this to you over here. So this is what we're looking at right now on the NQ. And you can see you've got, really similar type of action, like what I had on the trade on oil. So far, the momentum is breaking out, pretty decently. But when you're dealing with moving your stops, if you were coming into this trade originally on this pullback, original stop would be here. Looking around, I would say it looks to be, let's see here. It is around 88.12 or so. Then you've got the move up. It goes into this base, and notice there's kind of a pretty deep V pullback in there. So what I'm looking for is that when that channel breaks, that's where I would wait and move the stop at that point. So once that channel broke higher, you could move the stop. Let me put that on a drawing here for you. So here's what we would be seeing. We would then have the original stop here. Then as this breaks out, basically doing that two-wave phoenix, then you can move your stop a little bit more aggressively. You can either use the absolute low or that second portion low. This is the more conservative one right here. I'll kind of make this a little bit bigger so you guys can see it. So more conservative is here, and then the tighter one, more aggressive one, is going to be here. And what's going to happen is that
Hey,
usually,
Tony,
yeah,
I don't think we're seeing what you
you're not
think. We're
seeing
seeing
it.
the evolution of a stop today.
Okay, hold on. Let's see if I can figure out why it's not showing you that.
You might need to, is it a separate window that you're trying to share?
See, I thought I was sharing the window, but it might have just shared the PowerPoint.
Yeah.
All right, how about now?
Oh, yeah, now it's coming up.
Now you do. Okay, thanks for the
Yeah.
heads up on that, you guys. Okay, so let me clear this and you guys can see it a little bit better. I don't use Zoom as much, and we've got kind of like a new one here with Anka and David are using it fairly recently too. So what we're looking at for the stop, original stop goes under this low here. And it's basically that same kind of two-wave correction. It comes up, we get a base, and then it's trying to break out again. So let me clear these off of here. You can see it a little bit better. There we go. And so the secondary break here is just like that next zone of congestion. So when that breaks higher here, that's when I can go and I can move my stop and get more aggressive with the stops. So that's going to help things out and keep you in a trade longer and reduce your risk of getting flushed out on the trade too. What's going to help you even more, I'm going to kind of tighten this up a little bit more. So it's going to look a little fuzzy for you. But notice distance between highs here, you guys, right here, then right here, and then right here again. It's kind of even spacing. That's going to help that break out more strongly. If the spacing is tighter here, I don't want to get aggressive and move my stop under that low little tiny base. I want to keep it under the bigger base right here. So hopefully that makes sense with what we're seeing right now. Let me go back up and show you guys the main chart again here. So you can see the evolution of this trend though. As it's moving, you're going from these lower, slower levels where first it has that kind of first correction, then we've got that second correction, and then the momentum is increasing. So if we're looking for this to go to a measured move right away, we would want to see that really take off at this point. We could move your stop under that level next because you've got original stop, second adjustment, third adjustment, and then here's the fourth adjustment. And then you're going into target mode on the smaller time frame. But if we look at the bigger time frame, that bigger one still has more for a measured move. So it could treat a small correction and then go for a bigger a bigger continuation too. So this is how we can tighten this up though and not get flushed out. Now once it gets to this point, you can start to use things like channel breaks to help keep you in those trades longer and look for more, but always expect a secondary correction. So if you're looking at this larger time frame and anticipating a measured move on that larger time frame, I would want to wait for another pullback here before I would move my stop up from this low. So here would be, oops, let's see here. Here would be that stop, wait for the second pullback, then move it to under that low, and then as that breaks higher, you can start to go and get more aggressive with the channel breaks again, because that will be coming up on closer to that measured move, where this is your little kneecap on that larger 500 tick chart. So that's kind of taking that same strategy, same idea, and then applying it to what we're seeing in the market right now, getting the most out of the potential for the trade without giving back too much. All right, let me go back to make sure I got the right screen sharing with you guys. Flip back over to our PowerPoint here. All right, you guys see the PowerPoint again?
Yes, I do.
Awesome. Okay, perfect. Okay, so a little bit about what I do now. I did a live trading room for like 12 years or so, starting back in the, say kind of as like towards the late 90s. And I ran it live like 24/7 practically. And then I went to just doing more advanced teaching, advanced training courses, things like that, and private mentoring, that sort of thing. But I had a lot of people wanting to do more of the live stuff again. So I kind of compromised. I created a program I call League of Traders. And basically, we meet every single day at noon, and I teach live using the markets. Every week, we have a very specific focus. This week, right now, we are doing gap trading. Next week, we are doing advanced trade management. So it's everything that I talked about in today's class, but showing you a lot more of the details, like when things aren't even getting going, what do you do? How do we get more aggressive in managing a trade that's not following through like it should? So, and how do we hold for even more than the basics that I shared with you today? So that's what's coming up next week. It is a group of, we have everywhere from beginner to advanced, but I would say it really caters to those that have been trading for a couple of years, because it is, it goes into a lot of advanced stuff. It's basically taking the private mentoring that I was doing and making it into a group scenario so that I could teach live. So you guys are seeing, hey, minute by minute, this is what I'm thinking and this is why. And what are all the things that are going into this? So these are what some of the folks have said. Share with you here. So we have a chat platform. That's what you guys saw me pull up there. It's called the League of Traders Forum. And basically everybody in there can participate with other traders, kind of have their own little family and community there. And I continually teach. So I am in there, not quite 24/7 anymore, but pretty darn close. I'll come in at all hours, basically. Post things I'm trading, why I'm trading them, what's of interest. So, these are just what some of the folks have said. And what I'm offering for you guys is 3 months access to this for $150. So what it entails, let me get into the details there. Basically, every single week, we start off with Mentor Monday. So at noon, I give a class on a specific topic. So this week, for example, it was what kind of intraday strategies can I use to get into gap trades, especially for multi-day trend moves. And last week we talked about the different gaps that could lead to stronger trend moves, the gaps that are most likely to close, and we not only look at things that have happened in the past, say, hey, these are the great gaps, look at, they were perfect, but we go and look at what's coming up for earnings. What kind of gap is that stock gonna do? What can we do with that? Like Campbell's for today, for example, is one we were looking at yesterday. And so they'll give you an idea of what's happening right now and how can we use that information right now in the market. And that is probably the most important thing about League of Traders, is that you're learning in a live market environment, but you're focusing upon one aspect of the market at a time and how those things then fit together. So I do sessions, for example, on trends development. I do sessions on time development and basically everything under the sun. Then from Tuesday to Thursday, the class that I do on Monday, we expand it and we just follow it with the live market action. Friday is forward focus. That's where we look at the market ahead. That's where we see, hey, you know what? This market's going to crash and why. So here's one of the things that I shared with them. I'm going to grab another chart of the NASDAQ here on the daily time frame to show you guys what we were looking at and why we expected the market to pull back more. So just a little brief tip here. I just got to grab this. I closed my charts on here because the market has been so crazy. So I've got my charts on my trading computer open and just kind of flipping them over here to my teaching computer for you guys. So here's what we're looking at on the daily charts. I've got to open that screen back up for you. New share. Media viewer. Right here. So notice this correction back here in December, the really strong 2-day move, right? Notice it again over here, January, same 2-day move. Guess what was happening going into the other Friday? Same 2-day move. You know what? Market doesn't like to do that 3 times in a row. Third time, it is not usually going to have the same reaction. So the last 2 times managed to correct, come back up, make new highs. Third time is not the charm when it comes for the bulls for something like that. So this was just one of the many things that told us Friday midday. So we do forward focus at noon on Fridays, told us midday that this was going to go and do a much, much more substantial correction. And we've been looking for catalysts like this here for, a couple of months, but there was no real setup for it yet until this point. So that's what forward focus is on Fridays. Every single thing is recorded and available on demand. You also get access to our Telegram channel. And let me pull that up again. So the Telegram channel is here. And so what you will see in Telegram is I will share strategies, I'll share key market levels, key things that are happening in the market, keep an eye on different trades. So we have an alerts channel, and then I've also got a
we're still seeing the chart. We trying to show.
Goodness, you guys, you know what? I got to keep flipping to different things here. Telegram. There we go. See it now?
Yes. Yeah.
Okay. Yeah, it's not letting me just share my screen for some reason. It's just sharing apps. So a little bit different. Sorry about that, you guys. So what we've got here is just the different channels here and looking at how we're doing different trades. So here you can see the flip. This is my flip on oil this afternoon, or I guess it was this morning, and then I flipped it back up. But you'll see a lot of these trades and things happening, and then I'll go into details and explain why they happen to as well. So a lot of live education there, which I think is really important because you guys get to see a lot of the nuances of things. So in Mentor Monday, you'll often see things presented as here's the core. You know, this is your Cliff Notes version of a strategy, for example. This is how you trade the strategy. And then throughout the week, as we're coming across the strategy, you're starting to see what those different scenarios are that shift the pros and cons and shift the way you would manage the trade as it's unfolding. So it's a really important aspect because you're not just seeing the perfect endpoint scenario, but you're actually seeing how things are playing out and what I'm expecting to happen next. So we're often giving trades based upon whatever that strategy or concept is that I'm teaching that week so that you can follow it throughout the week. So anyways, that's what I wanted to share with you here, guys. Today, you can join me for 3 months. You can get this for $150, so it's $50 a month. I charge $400 an hour for private mentoring. So you are getting a pretty good deal here because you're still getting my core focus. You get to ask me any questions you want. You can go and put up your charts, and we often have discussions in the forum. So people will ask me, hey, you know, I took this and I don't understand why this one didn't work. So I'll go and give like a little mini class on why their trade didn't work out and what are the things that they missed so that they don't miss it again. Or so and so, such and such trade went way further than I was expecting. How could I have known to have held on to this particular trade longer when in the past it wouldn't have gone further? That's actually what we're going to be talking about next week, advanced trade management. So we're kicking that off on Monday at noon. So if you want to join me for that, here's your chance to do that. So thank you, Anka and David, for having me here today. Do you guys have any questions? And sorry about the craziness back and forth on the apps here. A little bit of a learning curve instead of showing me the whole screen. How do you, okay, so one question that I usually get is how do I view the recordings? So you will get, I post the links to the recording a couple of hours after the session in the Telegram platform. And then there's also a member section of the website, ToniHansen.com. And so in the member section, there's a section for the Mentor Monday videos. There's a section for core concepts, which show very basic core ideas to help get newer traders up to speed. There's a section for bonus videos, and then there's a section for the League of Trader Live as well. After 3 months, every month is $100, and it's cancel whenever you want or keep going whenever you want. You also have an option if you want to do an annual membership. A lot of people choose that because then they get the logs forever. So like it goes back a good 2 years right now for the League of Traders. So they get access to all of the training back for 2 years. So you can have that option too if you want to. Let's see, any other questions?
A couple of people asked after the 3 months, I think one of your slides said $100 a month after that.
Yeah, it's $100 a month after that. Basically, you know, my goal is to make learning affordable for even newer traders. So it also gives you the opportunity to check something out where you don't have that huge like $1,000, $10,000 buy into something. I've been working with everywhere from very, very beginner traders to very, very advanced traders and hedge fund managers and that sort of thing. So I I think that I speak to all of those different levels when I'm teaching, and I always wanted to be a teacher. My mom's a teacher. I come from a family of teachers. My dad worked at Iowa State University. My mom was a math teacher. So I've always had like that joy in teaching and helping you guys understand not only what I'm doing, but also understanding your own trades better. I think I hear a lot of people like, oh, I need a psychologist and XYZ, and like I've tried out all of these trader psychologists and they're just not helping me. And I think a lot of that comes down to people, it's not necessarily that you need a psychologist, but you need to have confidence in your strategy and in your system. And there's so much information out there. When I began trading, there wasn't a lot, so I kind of had to start from the beginning, but now there's so much that you have to weed through a whole bunch of garbage to find out what works. So I think that a lot of people's emotional aspects when it comes to trading right now is just simply not having the confidence in a system and knowing that that system works and that it can work for them. And so it's important to see things play out live in the markets and see the little details that go into it, and to go back and review and study that. So having recordings for me for every single class is very, very important.
Awesome, Toni. Thank you so much. Anyone
You're
else?
welcome.
Any questions? Don't forget, guys, take advantage of Toni's offer, ToniHansen.com/150.
And I've got a lot of people that are willing to talk to you if you want a recommendation. They're like, hey, Toni, do you need me to say something for you? I'm like, okay. I'm horrible at marketing, you guys. I'm like, sure. But yeah, if you want a referral, hit me up. I'll send you referrals, and you can go to talk to some of the people that have been there. You can email me at Toni@ToniHansen.com. I'll stick that here as well. So let me post that in here for you guys. So Toni@ToniHansen.com. That's my personal email. So that's going to go directly to me. So any questions, I can even shoot you over a sample video of one of our classes from this week or last that you can go and take a look at too. So, but I look forward to having you join us and working with you and getting to know you guys better. So have a wonderful rest of your day, and I hope you've enjoyed this whole platform that Anka and David have put together here for you guys this week. It's been awesome. I love seeing so many more women in finance, especially getting recognition. So learning from us, it's a different environment, right, you guys?
Totally.
Totally. Yes. Completely different types of presentations too, I've noticed.
I know, everything was so awesome. I mean, I was just looking on the schedule, and it was like over 27 hours. It's
Wow.
literally at the end of the presentation, it's going to be 27 hours of trading education,
That is
and
wonderful.
literally trading education.
Yes, yes, that is so wonderful.
It
Well,
is amazing. So
thank
thank
you
you so much,
again.
Toni.
Yes,
Yeah.
yes.
Thank you,
All right,
Toni.
I look forward to hearing from you guys. Take care.